Richard Curtin, a University of Michigan Survey Research Center professor. He leads the team that came out with those consumer sentiment numbers. Richard, this is going to be really fun because I want to dig into this. What did you make of the current conditions index higher but expectations lower? What does that tell you?
Well, it tells me that consumers are really thinking that economic growth has really improved quite a bit and job prospects have improved quite a bit. But when they look into the future ahead, it gets a little less confident about the progress of the economy. You know, they're still worried about the how COVID will end, and these recent pauses and concerns about safety have upset a lot of consumers in terms of their uh, forward-looking expectations. But the main thing, the very most important thing is when we ask consumers to tell us in their own words how the economy is doing, more people favorably mention job gains than we've recorded in some years.
Hmm.
And then when we ask them, what do you expect the unemployment rate to do during the year ahead? We've recorded the highest level ever. And that goes back 50 years or more that expect declines in unemployment.
Well, that is really interesting. What happened to wages in that?
Wages, if you look at those under 45, they expect income gains of 4.5%. So, they are pretty good. And, we need to watch to see how the economy develops. If it can produce that sort of continued surge in jobs and surge in wages, I think, we'll see a boom in spending that lasts longer than we had initially expected.
So they feel better about jobs. They see unemployment falling. They feel okay about wages moving higher. I'm wondering what they said about prices that they're paying for, because in the Beige Book this week, we saw most industries saying that they're having to raise their prices in some capacity or eat it. Are they seeing it at all?
Oh, yeah. When we ask about buying conditions for various products, we recorded more people talking about high prices and fewer about low prices than we've recorded in a decade or more.
Wow.
And what has offset that is that they more often report favorable progress in job and income. And I think that we've seen that interplay between prices and income. And as long as income is rising and rising a little faster than they're concerned about product prices, we'll see continued gains in sales.
So then this is the question that the entire financial market is trying to assess. Is that scenario you just described transitory or not? What kind of questions do you ask and to gauge that? Is inflation spike transitory?
Well, we ask inflation directly what they expect the rate of inflation to be. And I think you already mentioned we recorded a 3.7% gain over the year ahead. And that's up quite a bit from last month's 3.1 or last year's 2.1. I think consumers expect some uptick in inflation given where we were a year ago. But when we ask them about the long-term inflation outlook, they're pretty confident that the current inflation is well anchored, and they expect a lower rate over the longer term.
Does that inform how they look at spending and investing their money?
It does. And I think, this gets into, do they have, how much are they going to draw down their very high savings levels? And, it really depends on the age of the household. Among older folks, they recognize that they've invested more in stock than they had usually done in their elder years, say over 65. And so they're a little more apprehensive, and they think higher savings is needed to balance those risks. Among the youngest, the millennials, you see that, they are not reluctant to spend because they've had quite a tough time managing their budgets and have not spent as much as they think they need to. So I think most of the drawdown in savings will occur among the younger folks and those that are still employed but in middle ages. But among the older folks who have, of course, the most savings,
Hmm.
we'll see modest declines in their precautionary motives and
It's so,
therefore modest declines in their savings.
such a good distinction on the ages. As we wrap this up, what's the best answer that the market needs to pay attention to? Like, what's the best question you ask and the best answer that market participants should really be keen on here?
Oh, I think it's on jobs. I mean, consumers rate the two risks, jobs and inflation, quite unequal. I mean, they're all about jobs now. And as long as jobs continue to expand and we continue to draw more people back into the labor force, consumers will continue to spend.